What up, traders? What up, investors? Ken here from Dyslexic Investor, and we're going to be looking at a fantastic trading strategy, the pros, the cons of making a 85 to 80% plus win rate percentage-wise, okay? Which is very high on a lot of the back testing. But we're going to be going into the pros and cons, talking about the rules and the setup, and some of the indicators that were required to run this particular back testing or trading automated setup. So first and foremost, you're going to need RSI. Okay, what is RSI? That's the relative strength index. That is a momentum indicator used within technical analysis. The RSI, what it measures is the speed and the magnitude of a security's recent price change, equivalent to the oversold or overbought or overvalued or undervalued kind of scenarios. That's what you see on the lines below here. You see the 70 and 30. Again, this is the default settings. Per this rules, we'll go into more depth exactly what they requires the RS settings to be once we go to the next part. Next is going to be an exponential moving average of 200. Okay, so this is going to basically show us the potential trend being bullish if it's below it. Bullish if we're above it, bearish if it's below it, right? That's a basic technical analysis one-on-one there. Next, we're going to be using and back testing multiple different stocks, ETFs, and so forth on that set. So you're asking, what are the rules for this particular automation here and this particular trading strategy? First and foremost, like we talked about, you need that 200 EMA here, which we have set up as the red line. Next, we're going to need the RSI, which is down here below. The default RSI setting is 14, 70, 30, but we're switching it to a 10 period moving average, moving that from 14. And the rules behind it is quite simple. Again, we explained what RSI is. If RSI is less or equal to 30, okay, so it's got to be below this, I guess it's yellow kind of line, we're going to be buying it, and price has to be slightly or greater or equal to the 200 EMA price or above. Then to close out the trade, RSI needs to come back up and hit that 40 range, which is again that really strong red line saying closing trade, or after 10 trading days. This works very well on the daily chart as well, which we'd be looking at directly. We can kind of zoom out here. You can see this is going to be the S&P 500. This has happened quite a few times of the overbought or oversold level going below 30, so being dramatically oversold and then kind of bouncing back. That's what we're really playing for. And this strategy, again, being mindful, is not going to be getting the whole upside move. You're just going to be cutting and scalping the very bottom over-exaggerated move that is potentially to the downside and playing that the psychology of a substantially over sold markets. And once we kind of jump into the data, you'll see that 80, 75% of the times it has a very high win rate. But when we look at the scenarios of this occurring on multiple stocks and ETFs within the known market, it doesn't happen very often, but it does. When it does, it has a very high win rate. So that comes down to basically the downside to this particular move strategy is that the occurrence of these particular outcomes or these potentials of trades and opportunities are very few and far between. So let's go and look at the data and look at some examples moving forward here. So we're going to be using the help of TrendSpider, which is a great back testing and also charting market scanner that I've been kind of testing and playing out with. There's going to be a link in the description if you want to check it out as well down below. I'm actually loving it a lot for back testing. So first and foremost, we're going to do my market darling. We're going to do Tesla. So we're going to run. You see the parameters down below here again. Again, rules above the 200 EMA. RSI has to break 30 on the daily chart. The closing trade is basically if it hits the 40 limit or after 10 trading days. So it ran its test. You can see up here. All right, great. You see this goes back basically 12 years for Tesla. We see that the mean return of about 5%, which is, it's not bad, right? But you start seeing the downsides when you kind of come into here to the sides here. You start seeing, oh, wow, like out of the 12 years, this only occurred 13 times for potential trades. You see a max drawdown, which could be consecutive losses back to back of 20%. That's not also great as well. But the winning average is very, very high compared to the loss. This is not the world's greatest example, but this is showing the very high win rate of 92% of winners. But at the same time, not having the win rate being higher than the loss. So Tesla is not the world's greatest example because of its trend. But let's go back to, let's test with SPY. Oh, not TSPY, SPY. Going in here, you see here, we're going to run the scan here again. A very much small return of 1.23%, but we have 40 times now, but in 27 years on a daily chart. We have a total net profit if you invested it would be around 62.13% compared to if you just held the S&P 500 the whole time for 27 years, you would have a return of 544%. So that's it's good to know that information. You see here again, the wins and losses little on this bar here. You see again, very high win rate, all right? This is why the strategy is very much talked about on the community tabs and so forth, with a max drawdown only being about 8%, which is, it's better, but not great. You have the average win size and win-loss. Again, you want your winners to outweigh your losses. Of course, at the same time, we have a lot more wins than we have losses. So this is a pretty good risk assumption here. Let's go and jump into another ETF. We're going to be coming into QQQ with same parameters, let it run the test. A little bit higher here, okay? Again, we're going back 24 years, only 31 occurrences. Again, this is very much of the downside of this particular function here in this trading strategy. But you see that the win average is 2% and the loss is less than 1%. That's actually really good to know, all right? Even though some of your max winners were 7%, you can kind of see down here, and we can launch the trades and kind of go through it here. So if we just kind of scroll through, we can kind of see some of the trades where it was entered and where it was stopped out. You see that it was entered here, it just was above 200, but then guess what? It got killed because of it hit the 40 range, but it was below the target price. Continue going back down. During the pandemic move, we even had a trade put in for a staggering 0.2% move on a, again, very much, again, the RSI is looking at the momentum of downside. So this is the standards that we put in is we're playing a potential bounce on oversold, okay? And you see here, and basically in the year of 2019, we've had 2 occurrences. Again, going back to the data, after 24 years, we only had 31 total positions. You can see here some of the larger, again, not large, but a 3%, winners here as well, 3% on multiple times here, 1.5, 2.24. Again, this happened pretty close to each other again in February, if you remember that kind of trading that was coming off of some bad, I believe, if I recall that right, that was due to non-farm payroll, and that's when I started to really pay attention to non-farm payroll in 2019. Kind of these crazy kind of pullbacks here, again, playing to the side of like, oh, once it goes below 30, as you can see here on the chart, and bounces back up to 40, we're gonna snip it and kind of scalp that potential move on the bottom here. Again, another 1.1%. As you can see here, there's a substantially much more amount of winners than there are losses. So it's very lucrative to potentially have this trading strategy kind of in your back pocket and knowing that this does exist. I'm not saying this is going to be raking up the millions. You're going to be able to buy a Lambo and buy that yacht that you want to get, but this is just a beginner's understanding of what potentially you could see in returns if you did an automatic trading bot and setting up the parameters in or around these kind of things. So let's go look at something else. Let's kind of compare it to ARK, right? Everyone knows and loves ARK, right? So ARK has only been around for about 8 years. 8 years, it happened 7 times. So basically less than one a year opportunities. But when those did come through, they were pretty significant. So we can kind of zoom in here. Once again, a very high flyer does pull back. You get that oversold. That's when you see a lot of people on CNBC of like, oh, things are oversold. What do they mean by that? They could potentially be pointing to the RSI down here as well and seeing that kind of bounce back up. You see, again, only 7 times, but 86 of those were winners. And the loss was only 1.79%, and the max win was around 3.79. So the average was around 3.79, with the max being well above 10%. So just in a matter of basically 2 weeks right here, you could have made easily 6%, nearly over 6%. And just implementing this strategy. You see this beautiful move here on ARK. This was again, way oversold on the RSI. It picked it up. It was below that 30 just by a hair. Coming back up. Again, it was above the 200 EMA, which is a blue line on this chart, and took it back up and sold it once it hit that 40 range. Because again, ARK was very aggressively in moving. So kind of keeping in the font or the format of having this very high momentums. What do we know of a stock that has had crazy pullbacks? The Meta, right? Meta has insane amount of pullbacks in the past couple months, especially with reevaluating things. Even with those crazy pullbacks, this has not been triggered basically for the year of 2020. Which is quite surprising, right? But there were a number of different occurrences that it did happen. The win rate is, again, the winners are high, but the win percentage is not as high as well. So it's very particular to stick to the rules of what is causing these kind of moves. Let's kind of look at like USO, which is, again, oil. You're seeing this, again, very kind of muted again. 11 occurrences over 17 years, nothing too great there. Highlighting the winning average is actually less than the potential losses going forth. Again, the strategy is not made to be able to be like a day trade. This is just on random occurrences. Not saying it works on everything. Another market darling, AMD. This one plays out a little bit better. Not as substantially. There is I remember looking at this one. Yeah, it had a loss of nearly 24% at one of the trades, and I wanted to find when that was, but this does pay back well when things are going, again, quote, unquote, well in the front end. So I was able to find it on the mini chart here. It was basically January 12th of 2005. It had a pullback from basically the price, AMD price from 90. It's not wouldn't be the price target, but a pullback of that 24% in this very large red line here. A couple other examples I wanted to highlight. We can do something like IWM, which is, again, the Russell 2000. It's a little bit more steady. Again, with the lack of movement, this strategy plays very well with ETFs. It's not going to, again, not make you that Lambo yacht money, but it's a nice, steady, known strategy to keep an eye on. The Russell's a little bit more stagnant to not the highest win rate, but it did make a pretty substantial return, about over 1% average return, an occurrence of, again, 24 times over 23 years. So again, at least once a year this occurs. So this, again, is something that it's going to be your main bread and butter kind of strategy. But it's definitely going to be something like, let's look at another stock like Nvidia. This is going to have some crazy moves as well. I'm pretty sure it's going to be, this is a little bit too dramatic. You see same with AMD, that the win rate average is not as good as the loss. Because again, this has only occurred 30 times in 24 years. Let's look at something like Steady Eddie, like a McDonald's. Like McDonald's doesn't have crazy moves. It's very much like an ETF kind of standards as well. For 27 years, this happened basically 27 times. Win rate really high, max drawdowns kind of high, but the difference between win average and win loss is a little over like a 0.75. But at the same time, you're having substantially more amount of winners. And this is not, again, something where like this does occur, you're putting all the poker chips in. This is just something to kind of be mindful about and potentially kind of have like a way down the list of a back burner kind of strategy and kind of a scan that you could potentially be looking for. But on that note, if you have any comments, questions with the data, the rules and so forth, please put it in the description down below. Please don't forget to like and subscribe. I'm going to be doing more videos on back testing and automating and scripting and so forth. I'm really getting enlightened by a lot of this stuff and automating trading. And hopefully you join for my journey, and I'll catch you guys on the flip side. All right. Peace.